In Cape Town now, joining us to discuss the impact that high municipal rates are having on commercial property in South Africa. It's Gary Palmer, CEO of Paragon Lending Solutions. Morning to you, Gary. Rates are the kind of thing that a lot of people don't talk about. They sound boring, they get automatically deducted, but it can be a big cost to the business. What's the state of play with rates? Are rates higher than they used to be in proportion to a company's revenue and expenditure? What's been happening?
Absolutely. Good morning to you and your listeners. Absolutely. When you look at commercial property and you look at the expenses, ultimately what we've seen over the last 5-6 years is that expenses have increased dramatically. The major component of those expenses are property rates and electricity. Now, if you just focus on the rates for a second, we've certainly seen, some clients of mine are telling me that their rates bill has increased by 500% over the last 5 years. Last year alone, 23% increases were seen. So, that's on the rate side. Electricity prices as well has had a huge impact, where electricity prices have increased over 170% over the last 5 years. Now, if you're a commercial property owner, your lease does dictate that you can pass on these costs to your tenants, but if your tenant, it's very, very difficult to absorb these massive increases. So there's a bit of a standoff between the landlords and the tenants at the moment in terms of who can afford to absorb these costs.
Gary, I can understand the electricity because Eskom has to pass on its costs, and electricity was artificially low for a long time. Why are the rates increasing at such a high rate, if I may put it like that? Is it an indirect way of taxing people more?
Yeah, absolutely. The municipalities are requiring income and requiring revenue, and the best way to do that is through property rates. So, there's a whole debate. I was recently at the SAPOA conference in Cape Town, where these big listed funds were having a debate with the apmunities. They're requiring revenue, and these all property owners are complaining that they don't understand the factors that are being attributed, how they can apply these massive increases. So, it's just another way of the municipality taxing landowners and property owners.
So what's to be done about this? You've talked about passing on the costs, but you can only do that so much. And are there other ways of reducing this cost?
Well, I don't think so. I think there's a debate that's happening in the market at the moment where there should clearly be better transparency. One thing is we all learn to deal with what's on our table, and unfortunately, if you're a property owner and you just see these huge increases and you're not seeing the services being delivered, on one hand you're seeing the costs increase, but then when you look at service delivery, it's not there. So that's what's causing a lot of frustration. So I think greater transparency and communication between the municipality and property owners certainly is required, and also communication between the landlords and the tenants. Now, these tenants can't afford these increases, especially when they happen all of a sudden and they haven't budgeted for it. So it's certainly a time for communication between the landlords, the tenants, the municipalities, and the lenders and the property lenders, the banks and other lenders who ultimately, when there's gearing against these properties, ultimately when the costs increase and the tenants can't afford to pay these increases, there might be vacancies and defaults which ultimately will affect the banks.
Yeah, looking at the effect of this on investment in that sector, I remember the IPD numbers, I think it is for 2011 and 2012, saying that commercial property in South Africa delivered the best returns. I think Johannesburg and Cape Town, they were talking about best returns in the world according to the IPD database. Now, if this kind of cost increase is coming in year after year, huge increases in electricity and rates, as you've explained, surely the investment proposition falls off sharply.
100% right. I'm personally concerned about commercial property with these huge margin squeezes. We've been discussing the cost increases. I think there's huge pressure on revenue in terms of the general GDP of the country, and some people say we're going into recession with interest rates increasing at the moment. I'm concerned there's a big margin squeeze when it comes to commercial property. What we've seen sort of in our business, in the lending business, is a lot of our clients are looking at other property transactions, and now they're starting to look again at residential. Now, pre-2008, we used to see a lot of investors, and clients coming to us looking for residential property investments. That somehow stopped. The banks stopped lending against residential developments and focused on commercial. And now we're seeing it coming back into the market where some astute property investors are looking at alternative property investments like specialized residential.
What are the vehicles for residential? I mean, the obvious simple vehicle is you buy a house. Or you buy other houses to let to people and try and make money that way. But you're talking about investment on a bigger scale. Is it housing estates? Is it buying up hundreds of houses? How does it work?
Well, absolutely. I think when I talk about specialized residential, you speak about student accommodation as an example. These are residential components where you can get big scale. And on student accommodation, we've certainly seen that. And now all of a sudden these big listed property funds are now speaking about student accommodation where they might not have spoken about it a year ago. Another one is retirement villages and retirement complexes as well. And also another concept called multifamily, which is, in the United States, it's a massive part of the property market, all these big housing and residential estates. And then in South Africa as well, you've got the affordable market as well. And the banks have become particularly aggressive in the affordable space. And now we're seeing them opening up their channels to focus on other specialized residential. So my view, in the next 2 to 3 years, you'll start seeing these listed property funds start focusing on the specialized residential area.
That's an interesting one. Of course, so one then has to look at residential rates as well. That was Gary Palmer, CEO of Paragon Lending Solutions, who joined us from Cape Town.